What's going on, everybody? Welcome back to the Radical Marketer YouTube channel, where we talk about how to leverage credit, how to leverage social media, and how to make money online. So if those things interest you, smash that like button, punch that subscribe button. I make videos daily and you do not want to miss it. If it's your first time on the channel, welcome. I'm so glad to have you here. I promise not to waste your time. I give you all stuff and no fluff. These are very conversational, organic videos full of data points in the comment section and bringing awareness to help you get access to high credit funding. Guys, in today's video, we're going to talk about the Discover soft pull credit check personal loan. So it's going to be a soft pull on the personal loan. I got a ton of data points for you guys and some input for you. But before I get into that, also shout outs to the entire Radical Marketer community that is subscribed to the channel. You guys have been blowing up the channel. I'm so grateful. So keep commenting, keep liking on every single video. Go ahead and do it right now. Join the private Facebook group. Link is in the description. And if you want to get in touch with me, add me on Instagram at Radical Marketer. Spell it with a K. Links in the description as well. All right, guys, so we're going to talk about Discover's personal loan product that's incredibly popular with people, okay? You may have never heard of this before. You may have heard of this before. Comment if you've heard of it. Comment if you've had it. But I'm going to go over some data points with you that you guys need to know so you guys can get approved for Discover. First of all, Discover, I've made a bunch of videos on Discover, and you can watch my entire Discover playlist. Discover is incredibly popular with most of you out there, and for those of you that have a relationship with Discover, you're going to have a very, very good opportunity and a good chance to get approved for this personal loan in the case that you would like it. Now, the thing is, Discover is huge on relationship banking, and they look for a couple things when they're dealing with this personal loan, and it's going to be very different. But this is going to be very similar to the Amex loan. Amex does a $40,000 soft pull personal loan, just like Discover does. Discover's 35 and Amex is 40, but they really both cater to their ecosystem of Discover and Amex to do their marketing and to do their pre-approvals and to just monitor how you spend, and then they will extend offers to you. But if you haven't had an offer extended to you, you still get this personal loan. One thing I would like you guys to know before I get into these data points with Discover is whenever you're getting into an installment debt, understand that most of the first couple years of the debt or the installment loan, you're pretty much going to be paying interest on the loan. So you need to make sure that you know how you're going to use these funds before you get into just getting into personal loans all over the place. They have their place. They serve a purpose. They're incredibly valuable at different stages of credit building and for starting a business. But you guys just need to know what you're getting into before you get into it, okay? So watch my entire financial literacy class, and I talk about why you may need a personal loan. But let's get back to the conversation at hand. So to get the Discover personal loan, let's go over it. Loans up to $35,000. The rates are pretty competitive at 6.99, and 24 is not too competitive. But if you have great credit, 6.99. If you don't have great credit, 24.99. One thing that I love about Discover is their customer service is renowned. They are great at that. You're going to have up to 36 months to 84 months, so that's going to be 3 to 7 years to pay it back. One thing I did want to make note of about this personal loan is you're going to have a 30-day guarantee, and what that means is if you return all of the loan funds within 30 days, you pay zero interest. You pay zero upfront costs as well. You'll never pay origination fee or closing costs. So I'm going to this is the plug I'm talking about, but I'm going to talk about the play at the end, okay, and how to use this and leverage this. But the nice thing about this loan is you can see this. It's easy. You won't even harm your credit score. It's going to be a soft pull. How much do you need? You put it in there. Then you put the reason why you need the loan. Now, I wouldn't put debt consolidation if you don't need debt consolidation, because they may try to pay off the lenders for you and not deposit the money directly to you. So I would probably put medical expenses or a major purchase or personal. I don't even know if I would put taxes in there, just because they could be like, well, why do you owe taxes? You know, wedding, vacation, things that are going to be not a red flag. I wouldn't put things that would raise a red flag or limit you from possibly getting the most amount of funding. Just like on the business side of things, your business funding is dictated based on what industry your company is in. So if you're in credit repair, good luck trying to get funding. Where if I'm in marketing and I'm in consulting and professional services, I'm gonna get funding all day, and you're not. Okay, it's based on how you classify your business, just like how you classify what the loans are gonna go to. Now, from what I've seen, you're going to need to have over a 700 credit score. The higher the better, because you don't want to be having a loan with 24% interest. I promise you that. But you're going to need to have over a 700 score. You say, what bureau are they going to pull from? Based on location, Experian, or TransUnion. Now, let me give you a play when it comes to companies that do these type of things. If you have a stronger Experian profile than TransUnion, I would lock your TransUnion. If you have a stronger TransUnion than Experian, I would lock your Experian. So vice versa, I would keep the bureau open where you have the less amount of inquiries, the less amount of new accounts showing up. Whatever your stronger profile is, lock the other one, so that way they don't pull both of them, or they just pull the other one, right? Dictate which one you want them to pull. So when lenders do this type of things where they pull at random, you can kind of dictate which one you want them to pull, because if one is locked, they may just pull the other one. And if they don't and you get denied, then you can try again, and after you unfreeze or unlock your report, okay? So that would be kind of my play for how to deal with that Experian TransUnion, since we don't really know exactly which one. If you guys know which one they pulled or your data points, comment in the section below. You're going to also want to have a good relationship with Discover. This isn't going to really be for somebody that just signed up for a Discover It card. This is going to be with somebody that's had the card for numerous years, maybe has a high limit, has great income in the system, and it's always important that you update your income in the system, because if your income would qualify for a specific loan, they can automatically send you pre-qualified offers. So always in all of your lending institutions, make sure that your income's right, your age is right as far as how many years you've been at your job, basic things that could trigger a pre-qualify. You want to make sure that all that stuff is right on the back end. A lot of people get sloppy and don't think about that. Also, your debt to income has to be strong. So you don't want to be having a crazy debt to income ratio. You want to have low utilization, low DTI, debt to income, and you guys can watch my video on what debt to income is. I'm not going to really go over that here. I'm trying to keep this video short, but let's just recap. Strong relationship with Discover, over a 700 score on Experian or TransUnion, low DTI, low utilization, high income. They like that. Putting a general classification on the loan purpose, and remember this. 30-day guarantee. If you pay back within 30 days, you don't pay any interest. There's no origination fees, no closing costs. There's no extra fees, people. You just need to make sure you have a good credit score to get a good rate, and you have 3 to 7 years to pay it back. Now, let's talk about the play before we get out of here real quick. If you qualify for this, soft pull, see if you qualify for it. If you do, awesome. That could be an amazing way to pay off 0% interest credit cards right away. And then what you could do is, once you pay off those 0% cards, you could call up those banks, ask if they have another 0% offer, and pay off this loan if you want. Or you can keep rocking with the loan if you want, and open up more 0% cards and keep growing your business that way. There's a lot of ways to leverage this thing. Always keep in mind there's a cost of doing business. When you're doing balance transfers, a lot of the time your credit unions are going to be a lot better, because a lot of the credit unions don't have balance transfer fees, okay? And you want to make sure you get a credit union that has zero balance transfer fees and a 0% balance transfer APR for a certain amount of time. All right, guys, let me know what you guys think about Discover. I'm trying to give you different credit products here that are soft pull, that are no credit check, things like that. All of you guys that have Discover, you guys got a great chance at a personal loan for the holidays. They want to lend money. They're open to lend money. Just make sure that you have the right data points going into it so you can leverage this money and get high access to credit funding. All right, guys, like, comment, subscribe, smash the like button, smash the subscribe button, join the private Facebook, join me on Instagram, and I will catch you guys on the next video. Salute.